That's right. Let's get tracking these global stories in detail. Now, tensions continue to escalate in West Asia, even as Iran calls for truce. Now, an Israeli airstrike hit Iran's state broadcaster live as the conflict between the two nations entered its fifth day. Now, footage showed a news anchor fleeing mid-broadcast as the blast struck a dual-use communications hub. Now, Iran said that 224 people, mostly civilians, have died in these attacks, whereas Israel has reported 24 civilian deaths. Now, as missiles continue to fly, Iran is urging Donald Trump to press Israel for a ceasefire, offering fresh flexibility on nuclear talks in return. Now, the IAEA has confirmed that major damage to Iran's top uranium enrichment facility has been done. But this conflict has had one major consequence, and that is affecting the global economy. Crude prices have been on the boil since Friday. Ashesha is here to tell us what the commodity is heading towards now.
Well, yes, Brent crude has surged nearly 2% yet again today morning to trade near that $74.5 per barrel mark. Remember, yesterday in the morning it did cross that $75 per barrel, but later, by the end of yesterday's trading session, it ended nearly 2% lower on signs of de-escalating tensions in West Asia. But remember, after US President Donald Trump said and he ordered evacuation of Tehran, again we have seen a spike in oil prices, and it is now nearing that $75 per barrel mark yet again today morning. Now, as far as crude infrastructure is concerned, remember we have been highlighting the importance of the Strait of Hormuz for the last several trading days, and as of now there has been no disruption in supply, and Iran, although they have in the past threatened to block supply, remember Strait of Hormuz transports, or this particular waterway helps transportation of about 1/5 of global oil supply. So any disruption in the Strait of Hormuz is likely to impact oil supply globally, which could lead to surge in prices yet again. But so far there has been no impact on this waterway. Transportation continues to be as usual, and hence there are fears of supply disruption, but as of now there is no actual implementation or any blockage in this particular waterway. But yes, today after US President Donald Trump ordered evacuation of Tehran, we have seen a 1.5 to 2% spike yet again in Brent crude, and it is currently trading at that $74.5 per barrel mark.
Thanks, Ashesha, for those details. Meanwhile, Trump is cutting short his G7 summit visit in Canada, and this is due to escalating tensions in West Asia. The White House confirmed he was leaving after evening's dinner with the world leaders. Trump had earlier urged evacuation of Tehran and criticized Iran for not signing a nuclear deal. He also warned that Iran cannot have a nuclear weapon. In fact, he said the dramatic post on Truth Social comes as US military assets are being repositioned. The summit has been strained by Trump's support for Russia and refusal to back a joint G7 statement on de-escalating the Iran-Israel conflict.
All right, then moving on, in a rare high-level call, the European foreign ministers urged Iran to resume nuclear talks with the US and avoid further escalation with Israel. But Iran's foreign minister responded that confronting Israel remains Tehran's top priority. France, Britain and Germany, who are parties to the 2015 nuclear deal, are pushing for diplomacy even as the IAEA says Iran is in breach of non-proliferation commitments.
But what does this conflict mean for crude prices and the Indian economy? Can our balance sheet manage high crude oil prices? Abhishek Gaushan, the head of research ET Now, joins in with an explanation on the whole issue.
Broadly, after this eruption of Israel and Iran issue, we have seen a sharp rise in the oil prices. That was quite natural because of their involvement in the overall production of the crude oil. But if we decode the data, then we've found that this Iran has mere 3.5% kind of a share in the global crude oil production. But what is more important for Indian perspective is that India has already stopped importing oil from Iran almost 5 years back. So materially, we don't see a direct impact of this issue on the Indian economy. But because of this Red Sea issue or or Iran has a control on the routes on which this oil transports to the Asian countries, we may see some kind of an impact on the pricing side. So net it would not have any impact on the availability of the oil, but it may have some kind of an impact on the oil prices which we have been seeing. And if we go back on the historical anecdotes, then it clearly says that historically we have seen an up to 25% kind of a jump whenever such kind of a issue happens in relation with the Iran. So the back of the envelope calculation suggests that even if oil prices will jump up to the 81 rupees, which is the 25% of the price where from this issue has been started, we could have some impact on our macro parameters, but that is quite manageable given the kind of a framework the Indian macro economy have. So the key takeaways from this issue is that, from the market perspective, is that in a near term we may see some kind of a volatility in the market, but largely market will remain in a range which would factor in the current economic and the macroeconomic fundamentals of the country. And as the time will pass on, we may see that the market will more factor in the earning growth prospects of the companies rather than that of this geopolitical issue.
All right. Thank you, Abhishek, for all that explanation about the matter. But moving on, now G7 leaders have reached a provisional agreement on a new strategy to safeguard global supplies of critical minerals, according to reports. Now, the plan aims to counter market disruptions like China's recent export suspensions and ensure fair, responsible sourcing. While not yet signed by Trump, the strategy pushes for diversified supply chains and stronger coordination against mineral shortages. Now remember, critical minerals are key to industries from EVs to defense and remain a pressure point in US-China relations. In fact, we also caught up with Manoj Joshi, is a distinguished fellow at ORF, and also Jayan Das Gupta, the former ambassador and representative of India for the WTO, on the ongoing G7 summit that was hosted by Canada. Let's take a look.
Canada has lost its major partner, which is the United States. Because of Trump, there's a problem between Canada and the United States. Canada needs all the friends that it can have. So it is reaching out to other countries, reaching out to Europe. There is no reason why it should not also reach out to India. Because there are, we only look at the Canadian Sikhs, but there are Indians, there are Canadians of different areas in India who are also settled in Canada. The Indian non-resident Indians in Canada who are an important community there and can form the basis of a reset relationship.
The point is that in terms of outcomes, the G7 can only pass resolutions and point to the direction in which it would expect or an outcome. And it is for the principals involved in the matter to come to an outcome. For instance, in the Israel-Iran conflict, in the Ukraine-Russia conflict, etc. But the world opinion, as represented by the G7 and the outreach countries like India, Mexico, Ukraine, and the others who have been invited to be at the conference, they will convey the message back to their own countries and to their other alliance partners in different treaties, that this is what we need to do to give concrete shape to the outcomes which have been delineated in the G7 meetings.
Continuing with the G7 news, Donald Trump and UK Prime Minister say the long-awaited US-UK trade deal is now official. Standing together at G7 summit in Canada, Trump declared, "We signed it and it's done," while dramatically waving and briefly dropping the signed document. Starmer confirmed the deal covers sectors like auto tariff and aerospace, though specifics of the deal remain under the wraps. The leaders hailed the pact as a new chapter in the transatlantic ties. Let's go across and listen into that excerpt.
We just signed a document. This is, sorry about that. This is it. A very important document. A little windy out here. Give me that one. We just signed it, and it's done. And so we have our trade agreement with the European Union, and it's a fair deal for both. Going to produce a lot of jobs, a lot of income, and we have many other ones coming. But you see the level of enthusiasm is very good. But the relationship that we have is fantastic. So I just want to congratulate you.
Donald, thank you very much. This now implements on car tariffs and aerospace, our really important agreement. And so this is a very good day for both of our countries, a real sign of strength. So thank you again, Donald. A really important day for both of us.
What is holding up a deal with Canada from your perspective?
It's not so much holding up. I think we have different concepts. I have a tariff concept. Mark has a different concept, which is something that some people like. But we're going to see if we can get to the bottom of it today. I'm a tariff person. I've always been a tariff. It's simple, it's easy, it's precise, and it just goes very quickly. And I think Mark has a more complex idea, but also very good. So we're going to look at both, and we're going to see what we're going to come out with something, hopefully.
All right, that's the latest coming in on the UK-US trade deal, though finer details are yet to emerge. But moving on, OpenAI has clinched a $200 million contract with the US Defense Department to deploy advanced AI for national security. The one-year deal, mostly based in the DC area, marks the agency's first formal partnership with the ChatGPT maker. Now, this follows OpenAI's December tie-up with defense tech firm Anduril. Rival AI companies like Anthropic and Palantir are also muscling into the military space as AI becomes central to defense strategy.
All right, let's also pay attention to the global cues today. In US, retail sales data will be out, also business inventories and industrial production data. While in Japan, Bank of Japan rate decision is awaited anytime soon. Remember, the two-day meeting ends today. And in corporate action back home, Hindustan Zinc to trade ex-dividend today. And in terms of other events, senators are likely to debate on tax bill, and UNGA summit on the Palestine state will happen today.
All right, now moving on, let's also take a look at the state of India-US trade deal. Now, India and the US are nearing the completion of the initial phase of a bilateral trade agreement, which aims to finalize the text before July 9th, according to sources. Now, India is considering concessions on agricultural products and automobiles in exchange for a 10% duty on labor-intensive goods like textiles and footwear. Sumita Karir is joining us with all the details.
That's right. Negotiations for the proposed United States-India trade agreement are in good progress, and the two sides are expected to agree on an early tranche of the pact before July 9. That's essentially what government sources told ET now. In fact, the official also added that there is good progress, and we are hopeful that this will be done within the timelines. The official also added that United States and India are both looking at reducing tariffs, and both countries, United States and India, are looking at improving market access. India particularly is looking at labor-intensive sectors to have much better market access. Now, even as tariff talks happen between the United States and India, aluminum and steel duties that have been imposed by the United States have been a bit of a concern globally. But India's chief negotiator, Rajesh Agarwal, said that on the intended impact, he said that India does not export a lot of steel to the aluminum and steel to the United States. And on auto components, he said that there is a uniform duty on auto components for all countries. We've not seen a big dent on that. However, he stated that it will, if it's continued for a long enough period of time, then there will be some impact. And if some countries will get exemptions from that duty, then of course it may impact Indian players. Remember, negotiators from the United States were in India from June 4th till the 11th of June to discuss on a whole host of talks with respect to a US-India bilateral trade agreement. They discussed market access, they discussed tariff and non-tariff barriers, digital trade, technical barriers, legal framework, and customs facilitation were some of the key aspects that were discussed, according to what sources told ET Now.
Thanks, Sumita, for all those details. And with this, it's time to take a quick break.